Hey guys, welcome back to the channel. Been a couple days since I posted. I've been traveling here in Orlando and the Wi-Fi has been horrific, but I've been watching the memory sector. I've been watching the memory titans and I've been dying to post a video just to share my sentiment, my reaction to what we saw yesterday on the market, what we saw at the end of last week as well, just a continuation from Friday into Monday, and it looked like it was going to be that way this morning as well. If you look at your portfolio this morning about 10 a.m. Eastern, it looked like here we go again, another rough day for the sector, another tough day for the memory stocks overall. In fact, if I pull up the Barron's article, you can see, just look at the impact that we've had right here. If you look at the Philadelphia Semiconductor Index, as the headline says, having a good month until this week. You can see we're up to a 25.2 on the 14th of May and down to a 17.2 as of the 18th. Overall, as of the 19th, excuse me, a significant hit to the memory stocks, significant hit to the semiconductor index overall. We have seen capital rotating out of tech stocks due to a rising 10-year treasury yield, due to just the parabolic moves that they've had and a lot of profit taking that's been happening across the board. But we did see some hope this afternoon. We saw a bit of reversal, I will call it, because in the last 6 hours or the afternoon session, we saw a masterclass in just market mechanics and institutional positioning. Let me show you an example of that with just Micron as well, just as one surrogate example of what we saw. But you can clearly see on the screen that Micron had a gap down and a flush out here in the morning down to a low of 652.22 on the day. But what happened after that was just a massive sign of institutional support and conviction that drove the stock all the way back up to a high of 726 a share. Now, obviously, we had a little bit of consolidation and a little bit of profit taking and some algorithmic selling here at the end of the day, but finished with a nice strong candle across the board as well. So this is a good sign for the sector. It's a really strong sign for Micron because, as I mentioned, they finished, or I didn't mention, but they finished just over 2.5% on the day. Finished at 698, almost 699 a share, but they had a massive intraday swing from that 652 where they hit a low all the way up to 725 and finished about just under the $700 a mark for the share. And SanDisk had a very similar pattern today as well. It gained about 3% overall. It closed at just under $13.74 a share. And meanwhile, when we're looking at the other members of the Fab Four, Western Digital and Seagate, they didn't finish in the green today. They were just about under a 1% loss, but they had a significant recovery as well in the afternoon session from where they were in the morning lows. So today was a classic shakeout session. That's how I would define it. Weak hands sold at the opening. After what we saw on Friday and Monday, a lot of anxiety and panic took over the retail investors, and they sold at the opening overall. And the institutional buyers aggressively absorbed that liquidity to load up on the physical infrastructure stack or the physical infrastructure layer of the AI trade. Today, we're going to break down exactly what triggered that morning panic, the real data behind the afternoon reversal, and why the physical bottleneck of the AI infrastructure means this sector is far from done, in my opinion. So if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. I want you to be part of this community. If you get value from this content, if you enjoy this channel, make sure you subscribe now. So what exactly triggered the initial cascade or the panic that we saw in the sector and we saw with the memory players this morning? It came down to two core factors. The first was an article that came out from a former Samsung executive, a former boss of the semiconductor division, that predicted that memory crisis could be over next year thanks to Chinese RAM producers. And if I scroll down and just show you a couple key highlights from there, Samsung's electronics semiconductor division, the former president, says that the memory prices could fall starting in the second half of next year, thanks to a surge in manufacturing capacity in China. Furthermore, he went on to say that Chinese companies are aggressively expanding their production capacity. The result will be a surge in memory supply in the second half of 2027 and into early 2028. So a couple of factors that came to mind for me. I think first off, I think that time frame shouldn't surprise any of us. We have talked consistently about late 2027, early 2028 being when supply will be up online from all the new fabs that are being developed by SK Hynix, Samsung, and Micron. So that shouldn't be a surprise overall. The second piece is around the Chinese RAM manufacturers. They will have an impact, it's my understanding, on DRAM, but not HBM. They're far behind the US, they're far behind Micron, and they're far behind the South Korean manufacturers with regards to HBM. So there is a bit more protection with regards to HBM3 and HBM4 and future HBM products as well. But when that news article hit today, the retail world panicked, and the market read the article as a supply glut. And we know the history with the memory players and the concerns around the cyclicality of this sector overall. So it caused an immediate sell button. Investors hit the sell button, but they ignored the fact that in the article, they mentioned the 2028 timeframe, which is 2 years away. And I think many of us already know that reality, and we're managing the risk appropriately because the demand is right now in the market. The pricing power for these companies is right now in the market. But the second piece, the second core factor, is that we're coming off a choppy week where the memory complex has been down double digits from all-time highs. But analysts like Jeff Krulberg noted today that institutional traders have temporarily treated these high-flying semi stocks like short-term ATMs. Let me show you that fact, that reference, or the quote that he mentioned today. You can see in the article on the screen. Will semiconductors enter the correction after the historic climb? And if you can see right here, Jeff Krulberg argues that investors are currently treating semiconductor stocks like short-term ATMs, reducing positions to increase cash holdings after the sector's parabolic move higher. In his view, this does not necessarily signal the end of the trend, but rather an attempt to lock in gains after exceptionally strong performance overall. So there's been some good old-fashioned profit taking. We've said that. So when you couple that macro profit taking, what I just said, with the headline around supply glut or a 2028 supply concern that we saw from the former president of the Samsung Semiconductor division, you get an engineered morning flush that we saw across the sector today, that we saw with all of the memory players at all. But as the smart money knows, when a stock price drops while its underlying physical demand remains entirely unchanged, you don't sell, you buy in those opportunities. And that's exactly what we saw today with the memory sector overall. Let me just jump back and show you what we did see with Micron, and I'll show you SanDisk as well. But if you take a look at Micron, you could see that we had a flush down to 652, but a massive buy coming back, driven by a number of factors. And let me jump over and just show you a few, because there were some massive price targets that got moved today, despite what we've seen on Friday and what we saw with Monday. But if you just take a look at a couple, I'll just pull up three, because we see that Mizuho has actually increased its target from 740 to 800. There's going to be some bigger moves in here, because we look at Miletus, this firm actually increased their target from 700 to 1100 as of yesterday evening overall. And then finally, Citigroup as well increased their target from 425 to 840 on Micron. So all very strong signs across the board. You can see here this article around Micron gets bullish Citiview based on expected DRAM price hike. And that's what I mentioned earlier around the 425 to the 840, all driven around the pricing power that this company has because of what we're seeing in the market overall with DRAM, the demand that's in the market, the ability for Micron to meet that demand, and what we're potentially seeing with the Samsung situation in South Korea as well. But take a look at SanDisk, because they had a very similar reversal today when you see a bit of a flush out down to a low of 1278 today on the board. But then you see a massive kind of support. Look at that ascending staircase right here in this kind of 20-30 minute session that drove the stock back up across the board. And then you see it didn't have the same pattern. If you look at Micron, you could see, if I go back to the chart, in the afternoon, it had a little bit more profit taking, settled with a nice candle at the end. But SanDisk didn't have that. We had a little bit of a sideways consolidation with a really strong support candle at the end here across the board. And one of the things I want to share with you in SanDisk was a huge story. If you just take a look at here what Citigroup has said. So Citigroup has moved SanDisk's price target from 1,300 to 2025. Massive increase overall. And you can see represents a 50% increase for the stock. As it slips, we're seeing massive price target adjustments, not only for Micron, but for SanDisk. And in this case, Citigroup has moved it up of our 50% upside on the board. Our Citi Research, went up with a 50% increase from this stock. So that is a massive adjustment across the board. I think that's the type of support that we're seeing in the market right now. And I think that is the reason why you're seeing buy in the afternoon. It's very clear why some Micron and SanDisk were the clear winners this afternoon. It's because they are the ultimate pure play companies or pure play memory providers with regards to HBM and enterprise NAND storage. And when you look at Micron, we can't lose sight of the fundamentals because we know Micron's cloud memory revenue, it essentially doubled year over year. It pulled in $5.3 billion with a massive 66% gross margin. And there we got those new price targets based on the fundamentals we're seeing with this company. The stock is undervalued. It continues to be undervalued. I truly believe we'll continue to race back up towards that thousand price point with the stock as well. And when a company like Micron that has massive pricing power in the market, when it dips down to 652 like we saw this morning, it becomes immediately attractive for buyers who are looking at the long-term demand picture. So why did the institutional investors step in so aggressively around midday today? What were they looking at, and why did they reverse what we were seeing with Micron and SanDisk and the other members of the Fab Four? Because we saw massive institutional conviction and support in the afternoon session. Just keep in mind that while retail investors, we get blinded by massive year-to-date rallies. We've seen Micron up 130% year-to-date. We look at those numbers and that causes conviction for us. But institutional investors, on the other hand, they look at the fundamentals. And right now, the broader U.S. semiconductor industry is trading at an average of price to earnings multiple of nearly 58x. That is an incredibly premium valuation. But despite this massive run that we've seen Micron on, Micron is still trading at a significantly lower valuation. It's trading right now roughly at 32x earnings. The market historically discounts the memory stocks because it views them as a highly cyclical commodity. But we know with this AI cycle, it is fundamentally changing the rules. High bandwidth memory, whether it's HBM3E or HBM4, is not a commodity at all. It is a highly specialized proprietary technology that is completely sold out for the foreseeable future. Furthermore, we also saw today that the global wafer fabrication equipment, the spending forecast for that equipment got bumped from 135 to 140 billion for the year. Companies like Lam Research are seeing unprecedented demand because memory manufacturers are frantically scrambling to build out infrastructure to solve the massive chip storage. Institutional players looked at that valuation gap today, and they realized that Micron and SanDisk are the cheapest ways to play this AI infrastructure stack, and they aggressively bought the block trades for those companies. So what does today's massive intraday reversal mean for the rest of the week? First, today's price, it definitely established a definitive institutional floor. The heavy volume in the afternoon session, the afternoon bounce that we saw, showed that the big money has an appetite for the memory complex at this level. If we see further macro volatility this week, I would look at today's lows of 652 for Micron as your critical line in the sand or your institutional floor of support. I expect continued high-stake volatility for Micron and SanDisk throughout the remainder of the week as the market begins to digest today's massive intraday shakeout or reversal that we saw. And the primary near-term catalyst, near-term as in tomorrow, is NVIDIA's highly anticipated earnings report, which will drop after tomorrow's closing bell. It will serve as a definitive health check for the entire AI hardware ecosystem and either justify or cool the sector's premium valuation. And keep in mind as well, and I'll show you this piece, one other factor we have to keep in mind is on tomorrow morning at 8:40 a.m. Eastern, we will see Micron's executive team take the floor at the JP Morgan Global Tech Conference and give a presentation or a commentary of the sentiment of the company overall, the health of the company. So if the CEO gives any commentary on HBM capacity constraints or near-term pricing power, it'll be heavily scrutinized and it can move the stock in either one or two ways. So I highly encourage you to watch that presentation tomorrow, dive into the investor relations site for Micron, get a link to the presentation, and definitely listen to it because the institutional whales, they have established a clear floor during today's reversal. I expect these stocks to trade in a wide news-driven range as macro headwinds like climbing bond yields that we have seen this week and energy costs battle against the sector's undeniable structural demand. Overall, though, I do expect to see a bit of a choppy, volatile trading for as we continue through the end of the week as the market digests these recent gains. But do not mistake healthy consolidation for a breakdown of the thesis. The structural bottlenecks in HBM and enterprise NAND are real, and the valuations are reasonable compared to the rest of tech. And today's reversal proved that smart money is still very much in control of this market, and they still are very much behind the Fab Four of the memory titans overall. So guys, make sure you hit like, make sure you hit subscribe and turn on the notifications so you can get my future videos as well. I hope you had a great day. Sorry for not getting videos out the last couple of days, but I look forward to seeing you soon.